Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Matt Zolk here. I'm the host of the Same Day Podcast, where I connect with top business leaders and real estate experts. Past guests include Mark Marquin, mortgage lender, Jay Connor talking about raising private money, and Darren Huang, who has 100 units under management and a host of industrial properties. Check out those podcasts for some interesting conversations. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Listen, Adam, you know how hard it is to line up contractors to get a make-ready done in a reasonable amount of time. If you don't have the scale that you guys do with AGB, contractors are busy, the work seems to drag on forever, and all that leads to lost rental income. At Keyrenter, like at AGB, we line up our dedicated vendors so that turns can happen super quickly and we get more money back into the pockets of our owners. And that's why no matter what rental you have, a single family home, condo, townhome, apartment, we've got the management solutions that you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. I got to give a huge shout out to my boy, Mike Bosch from Atento Capital. He's the one that introduced us. And I also have to admit that all roads lead to Mike in Tulsa, globally, seems. It's worth probably mentioning that Atento Capital is doing some pretty cool stuff. You should check out their website at atentocapital.com. They focus on early stage startup investing. And they're an early stage investment firm focused on unlocking unsung potential. They identify high potential ideas, individuals, and then invest the early stage funding in human capital needed to take ventures from 0 to 1 and 1 to 10. So we appreciate Mike for having introduced us. Our guest today is Adam Rosenberg. Adam once played on stage with the Counting Crows. He's going to tell that story a little bit later. He's swum with humpback whales. He's passionate about creating attainable apartments for all walks of life, and we're going to hear all about that. AGB multifamily real estate developer finds creative ways to convert existing assets into profitable apartment buildings. Welcome to the show, Adam Rosenberg. How are you?
Great. Good to be on the pod.
I have to say, I love your background.
Thank you.
What is it?
I'm in what's just old recipes that sometimes inspire us to
cook.
Go on the wall and be like, this is what we're going to cook tonight.
I love it. When we were having our third child, the OB walked in and said, "Your wife's having a child. I demand that she not, or I prescribe that she not do any cooking or cleaning for the next 8 months or whatever." And when we found out we were pregnant, I was like, "That's great. She hasn't done any cooking or cleaning in years anyways." So I'd like to have a recipe board on the back, but it also makes me a little bit jealous because we just moved offices and I used to have an awesome Keyrenter property management sign that sat behind me, but now I no longer have it. It's somebody else's background in our office.
Well, we can see it on your shirt.
I know. I appreciate that. I stay branded all the time.
Yeah, I know you do. It's great.
Welcome. My wife hates it. Oh my God. She's ready for me to just be in civilian clothes. And I refuse.
Mark Zuckerberg wears the same thing every day, so he doesn't have to think about what he is wearing. It's one thing that you have to think about, right?
You get decision fatigue. Why deal with that? I go into my closet and I put on basically a white, blue, or light blue shirt. My wife will spend minutes thinking through this stuff. And I'm like, it just doesn't make any sense. Just put on the same clothes every single day. It's so boring, but it's so great. I've done it for years. I did it even when I worked at McKinsey years ago. I would leave, we'd commute to the hotel in whatever city we were working at in the Middle East. I might be in Riyadh, I might be in Jeddah, I might be in Doha or whatever. And I would always bring, at the start of the project, I'd bring a big suitcase and I would put, 3 shirts, a white shirt, a white shirt, a white shirt. And then I'd bring 2 suits and I'd bring 2 pairs of shoes and all my socks and underwear. And I would leave it all at the hotel. Everybody else would be carting their stuff back and forth. I had 2 ties and a bunch of white shirts and that was it. And I did the exact same thing even back in 2011. Anyways. Cool. Good to have you on the pod. Welcome to the show. Let's start with some basics. What do you do? How'd you get into the business you're in?
Yeah, so I am a developer. I convert dilapidated motels into workforce housing apartments. and do that in across the Southeast. Previously to that, I worked for a real estate startup in the short-term rental space. Before that, I had my own company that was looking to build a novel concept here in Nashville, Tennessee, back in 2014, that was looking to bring multiple different uses under one roof. If you imagine like a WeWork meets a Soho House type membership stays under the roof of a Ace or Standard Hotel for emerging markets. So that was a grand vision that I had after redeveloping a apartment building in Panama City, Panama, to a boutique hotel. I'm just going back here. And previously to that, I went to business school and was actually in IT security consulting before that. So I've had multiple different phases or chapters of a career to get me to where I am today.
How did you feel transitioning like out of entrepreneurship back into a W-2 role?
Yeah, I talk about that a lot. Going from entrepreneurship, running the show to W-2. I've done it a couple of times, and it's definitely a change of speed, change of pace. But it allowed me to really, after the stint as an entrepreneur, most recently, when the project in Nashville back in 2014, 2015 did not work out, I had to take some time to lick my wounds a little bit. As an entrepreneur, you wear your heart and your business and your life on your sleeve. And when inevitably something doesn't work out, and this was a very grand vision in Nashville, going back in and working with and for someone else was a welcome change at that time.
Interesting. We have a bunch of people in our office that have at one point or another tried their hand at entrepreneurship, and I find that they just get the business. It's they understand ownership, they understand kind of the buck stops with me mentality, and I love those people. They enjoy and appreciate the stability of a W-2, of a paycheck, but they also understand, and they understand the hardship and the hustle required to start a business and run a successful business. And I love them. I remember, when McKinsey fired me, the biggest complaint, and McKinsey fires you very gently. They call it counseling to leave. And there's just nobody banging their hand on the table hard enough to say, this guy's going to make it and he's going to be a partner. And they do it very gently. They say all the good things and all the bad things, but they invariably give you as much time as you need to find another job. But ultimately it's firing, and they fired me back in 2014, 15 at some point. But the biggest thing that I found was I couldn't take full ownership of a work stream or of a problem because I didn't own it. And that was really hard for me I always knew that there was somebody behind me that would backstop me. And in entrepreneurship, when you own your own business, it's not that way. It ultimately stops with you, and you have to just understand that if you don't solve this problem, if this email comes and doesn't get responded to, nobody else is going to do it unless you do. So that was, if I had to go back into a W-2 role, I think I would take that forward with me and understand ownership of a work stream, a problem, a business, whatever.
Yeah, I agree. I think actually just had a meeting with our property management company here in Nashville, and sat the team down and invited them to think like an owner.
Yeah.
And I said, if you see something, say something, pick it up, please. If you think we need something in this room or in this part of the asset, let me know, raise it to my attention, because I'm not here every day. And I really want to inspire you to really take ownership of this. And it's difficult finding that balance of in your team of people who are very comfortable as a W-2, but have that mindset of wanting to make the space as good as it can be. And one of the things that in our short time that we've known each other, one of the things I've admired is your organizational structure, meaning like how well organized you are. And I just wanted to ask,
I appreciate
how you put those things in place, how you became aware of them to provide the scaffolding that an entrepreneur needs as they grow a business, to have the time management, to have all the different aspects that you need around you when you don't necessarily know how to do that quite yet.
Well, I should say we didn't discuss on the podcast that you're going to throw a bunch of zingers at me, but I'll tell you, I don't know the answer to that. My philosophy has always kind of been to replace myself. And I think I want everybody to be thinking about replacing themselves, because when they replace themselves, then they can start doing higher level things. And a lot of people, I think a lot of our colleagues or people in general, W-2 folks, have the fear that if they replace themselves, they're going to not have a job. And my feeling's always been replace yourself. And then if you can do what you were doing, and I don't care who does the work, really. I think you should be on a beach somewhere enjoying time with your family if you can get what you needed to get done there. So if you consider that and say, I can replace myself with somebody that is up and coming, that costs less than I do today, and then I can relax a little bit, and then we'll put you into a different position where you're overseeing more people that can do the same thing, and you can grow and develop with the business. And our challenge as the ownership or leadership of the organization is that we have to grow, which is scary, painful, and involves all sorts of other challenges, but we have to grow so that people continue to have opportunities to elevate in the organization. But early on, I just said, I'm not good at this. How do I? It's actually the EOS matrix, the delegate and elevate matrix, which is great. Which is I do it well, but I like to do it. I do it well. I don't like to do it. I don't do it well, and I like to do it. I don't do it well, and I don't like to do it. So if you just kind of identify what you're doing and then start slotting other people in that like to do it and are good at it, then you find yourself doing less of the things, or fewer things that you don't want to do. And I just have empowered people to do what they do best. And I say that to people all the time. I had a conversation with somebody that called me the other day, and they said, I'm not getting a response from a senior property manager. And I said, well, I want to give you the assurance that this is going to be taken care of, and I can backstop that. But you've also jumped up 3 levels to me, so I want to give you the chain of command so that you can talk to the people that I've empowered to have these conversations, so that you can get an answer that is amenable to this overall situation. But it's not me that's going to give you the solution. So, I mean, I don't know if that answers the question.
That's
but
a great question. Are you an inbox zero guy?
No, God, I wish. Robert, who sits next to me, is inbox zero guy, and he recently got a $2,000 gift card from Superhuman to Airbnb for being at inbox zero for like the longest streak. I have like 800 emails.
I'm like inbox 5,000 guy.
Yeah. People look at my phone and they go, you have 2,000 unread text messages. How do you live with yourself? And I was like, well, I've considered suicide, but it didn't seem like an appropriate response to this problem.
And we need you here.
It's like, there's a lot of, I mean, I want to be copied on a lot of stuff because I want to make sure that it is being handled appropriately, but there's a lot of stuff that I don't need to respond to. And ultimately I may read it and think about it and mark it unread or whatever. But so let's talk a little bit about your transition into the business. How did you come up with the idea of converting motels to apartments? How did you transition into that?
Yeah. So my business partner had done I think 4 of these already, and had found a project in Nashville, and reached out to me and said, "Hey, do you want to come along for this journey?"
He was already a friend, or he connected with you through?
He was a professional contact of a friend / professional contact of mine. So someone who I knew in the industry for some time. We had met while I was at the startup, and he was at a company that had done these before.
Mm-hmm.
Was looking to branch out on his own. So right place, right time, meaning right city. Nashville is with a lot of other cities are grappling with housing affordability issues for people who are getting pushed out because as the city grows, apartments become nicer, jobs, more high paying jobs come to market, kind of fill in all those little gaps. And so the opportunity for workforce individuals to find attainable housing options is diminished. And certainly over the last 3 years with the pandemic, housing prices have been one of the stalwarts of the higher inflation. So it was, this market was really ripe for that. At that time, there weren't a lot of people who were doing conversions. It was a perfect kind of place where banks had seen it before, had seen that model done, so they could underwrite it. It wasn't this foreign thing that they didn't know how to underwrite and couldn't really get their hands around. So it was in a nice little spot where we found lenders that would do it. And not a lot of other developers were doing it. So, I looked at the model, looked at the environmental component of it, meaning your adaptive reuse, which is something that I'm really passionate about. and the opportunity to do well by doing good. And so all those, that kind of Venn diagram of aspects of the conversion process really attracted me. And I was, going back to what we were just talking about, I was hankering to put on that entrepreneurship hat back on.
Yeah.
Really kind of capture it.
It's an itch, has to be scratched.
Yeah.
Tell me about a couple of between you and Aaron, a couple of the successful motel to apartment conversion projects that you've completed.
Sure. So I can talk about the one here in Nashville. It's we completed it, substantial completion back in April. We started leasing in May. And it was a really dilapidated motel about 12 minutes from downtown Nashville. So still really accessible, close to the airport, close to where the jobs are growing, a place called Mount Juliet and beyond. And really, the Hermitage itself, there's a 300 unit condo development going literally across the street from us. So it's ripe for growth and development as people are kind of pulled away from wanting to live or needing to live downtown.
Mm-hmm.
It was 108 units, which we completely gut and renovated, pulled everything out down to, it's a concrete CMU structure. So, had 40 containers worth of rugs and beds and sinks, drywall, and just, pulled literally everything out. Nothing in the building was left untouched. New electrical, new plumbing, and started, building it back to form back in, we started in July and we finished in March, April. So a very, very quick turnaround time, very proud of that. And I have to tip my hat to our GC, who is a major part of making this project a success. Yeah.
But did you pulled 40 containers worth of stuff out that went into the trash or got repurposed through some sort of Habitat for Humanity restore situation, or you put some of it back in?
Yeah, the furniture we were able to donate or have the previous owner leverage in other assets.
Mm-hmm.
But we pulled out the tubs, which are not easily compactable. Other big things that just, it just takes up a lot of space.
Yeah.
So,
and you had 40 containers on site?
No, I mean, they would drop it, we'd fill it, they'd pull it sometimes twice a day. Yeah.
Wow.
Yeah, no.
How did the previous owner find themselves in a situation where they had this dilapidated structure? Like, why didn't they see a vision or just do maintenance over time?
Yeah. So this was, we found, which I think is typical of some of these, really run down motels, thousands of syringes that were used on site, for drug use. And this individual has, immigrated to the United States and, really built quite a portfolio here in Nashville. I would not, wasn't the best individual to negotiate against, but I do have to congratulate him on building such a large portfolio. He just doesn't take good care of them.
Yeah.
So he actually, I think, wanted to do it in this specific case. The councilwoman was not supportive of him specifically doing redevelopment because of the I think what we call bad boy in real estate. He wasn't constructive to the community and would put up blocks if they wanted to kind of really try and improve the area. So she was not supportive of him doing it. So he really had no other option.
Interesting.
So we stepped in, took it through the rezoning process, and once it was rezoned is when we completed the acquisition.
So how do you navigate some of the zoning and regulatory requirements when you're doing the conversions from motel to residential apartments?
So cities are pretty open and open to the conversion. So here in Nashville, it was not by right, but we met with the neighbor on who was here in Nashville and Hermitage. The councilwoman numerous times had public comment sessions. We wanted to make sure that we really understood the proclivity of the community to have this, and some people were concerned about traffic patterns and, what that was going to do to the neighborhood. But ultimately, the councilwoman was supportive because of the condition that the asset previously, and what we were going to, the beautification that we were going to do. I mean, it looks that the before and after pictures are, insane.
How could anybody not want a needle-ridden facility motel to be converted into, a much more aesthetically pleasing apartment complex that has a better demographic of people? I mean, I say that we had a thing come before the planning commission at 4th and Yale. It's been an abandoned gas station. The tanks have been taken out. It's just graffitied, and it's probably come before the commission 3 or 4 times. It's come before city council, and it's always been the conversion to a commercial use has always been rejected. The neighbors come out and vocalize their disdain for the plan. It's like, guys, right now it's just people squat and it's boarded up and it's graffitied. How can you not want anything besides this? But people have their reasons: traffic, parking, whatever. It's pretty crazy.
Yeah, someone brought up that we, that the next person, the owner should put a park there, which is very, very important.
It's not highest and best use. Who's going to buy it and then destroy all the building and put a park?
Yeah. So you have to, respectfully explain, kind of like, hey, that's something that
basic economics.
Yeah. Yes, of course.
I mean, we do that too sometimes.
Yeah.
We had somebody come in front of the commission and say about a motel conversion may or may not have been yours. And they were like, I just don't understand apartment prices have gone up so high. I want to make sure they're affordable. Like, I was like, wait, what? The solution to affordability is to have more units, not fewer units. Why are you against this conversion? This makes no sense. You don't understand supply demand, basic economics. But okay, cool. So you can get through a lot of the zoning just by having friends that support. I mean, people that are just in support because they appreciate and enjoy what you're planning on doing and making I
want to be careful. This isn't like a sweetheart kind of like backroom thing. This is very public. Going to the council person, and we do that in every city that we go to, and kind of explaining who we are, what we do, why we're doing it, and kind of the price point that we're looking to do, so they understand that this is really going to be a net benefit to the city. We meet with the police departments in this case to help let them know, hey, listen, like we're a new sheriff in town, unintended.
And your neighbor your neighbor across the street also is like, love this. It's not going to be a dilapidated motel with syringes. It's now going to be a benefit to the community to have housing.
Yeah, so it was a commercial tenant. So this individual had kind of like a strip mall type thing, and yes, everyone who actually knew what would happen once the development was done was very supportive. Others like our next development here in Nashville is by right. So even though I didn't have to, I went and met with the council person and walked them through kind of who we are, what we're doing, and wanted to get their buy-in in case they came up down the road.
Yeah. So how did you fund this project in Nashville?
Through LP and so limited partnerships. So we have investors that we bring into the deal, and walk them through the pros, the cons, kind of the challenges. But I have to say, in markets like Nashville, Tulsa, outside New Orleans, Orlando, North Carolina's, housing is really a significant challenge for these cities. Yeah. So the way we do it is we look at what the room types are getting and provide a discount to those in a lot of cases, because we're able to, and more often than not, buy the bricks at a discount to what it would take to replace what's called replacement value in real estate, and therefore are able to charge less on a per unit basis.
Yeah, interesting. Have you had any significant issues filling the new complex in Nashville?
No, I would say we're definitely on track for lease up.
So demand is there.
Demand is there. Yes.
How do you assess a market for demand before you go in and look at an asset?
We look at the housing trends in the area, kind of what the average or median one to studio to one bedrooms are. Kind of what we do market studies both by CoStar, something like that, and also by calling the competitors in the area and seeing what kind of vacancy they have. I mean, when you call people here in Nashville, there's not a lot of options. If they have one or maybe two units available in 3 months, maybe they'll have four, right? So that there's just not a lot of supply out there for all the demand of people moving to Nashville to support all the other jobs that are moving here as well.
When you go out to raise money from the LP side, first, can you explain the general syndication model, like how it works as an LP, what your risks are, what liabilities you hold still as a limited partner? And then can you talk to me a little bit about how you package up a deck? I mean, do you walk every LP physically through every deal, or is it just a deck that gets sent out with terms and the pro forma? Like, how does that all look?
Sorry, say it one more time. Sorry.
So on the LP side, when number one, how does the LP structure work? What are the risks associated with being an LP in a project like this?
Yeah.
And number two, for each LP that contacts you, and we'll link to your website if people want to contact you in the future about other deals. How do you physically kind of show them how do you show them the project? Is it physically, like you walk people through a site with a bunch of needles, or is it just through the deck with the pro forma and kind of expectation of waterfall?
Yeah, it's a great question. No, most investors, if they're not in the city that we're in, ever see the project before they invest. I think that a lot of like our investors in the New York deal, some of them did come down from New York, but majority of the investors that we have in our stable know us, our reputation. They know our reputation. They trust us. They certainly dig into the model. They certainly push on this assumption or that assumption. We send them all the data that we can. But one of the things that I really believe is that outside of the numbers, outside of the model, outside of who we are, a presentation really, a picture, it means that is 1,000 words. So putting a little bit of more legwork into the deck to instill confidence in the investor. Say, listen, these guys are putting some level of effort into the deck from an aesthetic perspective, from an explanation perspective, have understood what questions we may have at the front end, so that when we do have the call, they most likely they've invested with us before. If they haven't, then they can kind of get a taste of what they're getting before they invest in a single dollar.
Is that call why you have that very professional looking microphone?
That is why. Yeah.
So what is it? What are maybe some of the questions that LP have, and what are the risks that they're taking on as being an LP, putting money with you?
Yeah. So I mean, the risk is that the project could go sideways. It could take longer than we expected. There could be unforeseen costs associated with the project, and then ultimately either the rents are less than we forecast. But the risk that you have, just like in the stock market, however much you invest, unless you're doing calls or something like that, is the maximum that you can lose. You're not on the hook for any liability. If negative were to happen from a liability perspective on site, as a general partner, the burden falls on me. The limited partners are not exposed to any sort of liability risk or anything other than the monies that they put it up.
So the beauty is that it's purely passive from their perspective. They can choose to look at your market updates, look at your project updates, or throw them into their email trash and just wait for a return at some point, right?
And I put a lot of work and effort into those emails, so that I hope they, don't put it into the trash. But they, a lot of our some of our investors are more hands-on if they're in the industry and they have a say, and we welcome that input and experience. But a significant number of the investors really just say, "Hey, call me when it's done," and
when you're gonna send me a check.
Yeah.
I love it. Do you do any vetting of your LPs? Do you tell people no ever?
I wouldn't say no. I think that we like to have the some sort of, if needed. A lot of these projects we don't need it, but there is some value to LPs that bring connections or bring investors that in the future might be interested. So they'll do a little moosh boosh of an investment with us, on the understanding that they'll do much more later.
You really are a culinary guy, huh?
Just trying to sprinkle it in, a little dash there.
What about making sure that when you convert the motel, which has one set of amenities and space requirements, to an apartment, that you're maximizing utilization of space and that you're creating the necessary amenities for the new use?
Yeah. So the community that we're building for is really, we want to make a safe, environmentally friendly, comfortable place for them to call home. But these are not Class A office buildings with rooftops where they can, where they can go and enjoy. We put, like in here in Nashville and Hermitage, we put a deck, about a 40 by 40-foot deck out there for barbecue.
That's cool.
Dogs are huge in Nashville. It seems like everyone has a dog, so we have a dog run. There's plenty of grass where they can go, but we want to be a safe place for them to go, a clean place for them to go, so that we have a dog run. There's pools at a number of our assets. Again, it gets really hot here in the South, so and pools are a staple in most apartments. So
it just brings a whole new level of challenge in terms of checking the chlorine and code requirements and all.
Our tenants are worth it. Their happiness is worth it.
I appreciate that. It's just such a headache, and
it is.
And neighbors are coming in from. I mean, I've only done Class C, like truly Class C apartments that I've syndicated deals for, and I remember we filled in a pool very early because the stories that I heard from gun violence arising out of disputes in the pool area and people coming on site from other apartment complexes nearby, and it's just a nightmare. But if you're in an up and coming area, an area like Nashville that has more kind of path of progress, pushing rents up, and that's a niche you're trying to solve for, right? Affordability in or attainability in the workforce housing space, then it makes sense that there'd be a pool.
And competitive, right? So you got to remain competitive, right? So if other apartment buildings have them, you want to have them as well if possible. Now we're not installing pools.
Yeah.
If they're there,
you didn't install the pool. You just did the infinity edge that sinks effortlessly into the sunset.
Exactly. And you're putting jacuzzi there in the corner as well. Yeah.
I love it.
It's they have to choose you. Tenants have to choose you as their home.
Yeah.
And we don't take that lightly.
Yeah. So you talked about the renovation of the Nashville project being I forget what you said exactly, but like a July to May for 108 units. Is that a typical timeline that you'd expect? I mean, is that just kind of blazing speed for a full?
I think we could have done it quicker. There was a dispute between two city agencies that just wanted to talk to each other, and so that put about a 2-month delay in our.
How'd you solve that?
Just did other work that we could do without the permit that we're waiting on. So it was a complete loss of time, but your hands are tied, and that's why for me, I think one of my superpowers is really creating relationships on the city level to be like, hey Joe, like what's going on here? Like, can you please, pretty please, the sugar on top, call Jane and like have her call Mark or whomever, whatever it is, to get an understanding. I did call in my council person after a significant amount of time had gone by to get her assistance, just to kind of see if she could unstuck the stickiness. So I think we, on this next project here in Nashville, those relationships are well established, and I think and it's a different project, so I don't think that challenge will be there. But you never know. I mean, that's what entrepreneurship is. Going back to what we started before is, you're starting at point A, and you got to get to point B, and how you got to go through walls and under walls and over walls and leverage the contacts that you make. Bring in team members that can help you get there. Appreciate what other people have on their plate and why something may not be getting done as quickly as one may want it to get done. But
it's that, I mean, we face the same issue with vendors where you're like, please, for the love of God, get this done. You know, you want to push, but they're also the people that you're relying on. So you can't push too hard. You have to know when to
yeah,
back off. And
and
it's
raise your
so can be
voice,
so
even though
painful.
you want to scream and like,
Yeah,
it's just like,
can be
yeah.
painful.
And so I think that's that, and just seeing how you work and how you network and I've been a beneficiary of your network in Tulsa and thank you so much for being so generous with your honestly, man, like
Absolutely.
I haven't met many people in my life who have a city on point, on dial like you do and are willing to share the
I've learned
contact. Yeah.
I've learned a lot from Mike Bosch, who put us in touch, you know.
A lot. Yeah. So, I think, in our industry, it's a competitive industry and all of us are hard headed in a certain way, or else we wouldn't be in this industry. I mean, it's a painful, long process. You outlay hundreds of thousands, if not millions of dollars on a
Yep.
project, and that money doesn't come back to you. Now, you just said basically a 9 month development was fast. That's 9 months.
Yeah.
We started in 2022. It's already 2020, halfway through 2023. It's a long time. You have to get it under contract, and you have to go through the due diligence process, and then you have to go through the development
Yeah.
process. It's just a long
Yeah.
time.
Yeah.
And so that monies don't come back to us for
Yeah.
a long time. And as the GP, you're really incentivized to, that incentivization doesn't even come into play for 2 or 3 years after stabilization if you don't sell it. So, or after you open the door. So and when you get to stabilization. So it's just a long play. And I mean,
two things. One, real estate, you put $100 today to get $1 a month for into perpetuity,
yeah,
which can be painful. There's time value of money, there's opportunity costs, etc. And then the second thing is, if you don't rent that unit today, you never get that money back. Like, we need to get units rented and rented quickly because vacancy doesn't ever come back.
yeah,
So
yeah,
let's talk money.
yeah,
It doesn't make sense really. I was thinking to talk like dollar bills. I think percentages makes more sense because Nashville, the price of real estate is going to be more expensive. The cost of renovation is going to be more expensive, but like then Tulsa, I should say, to be clear, but on a percentage basis, um, what are you putting in renovation costs as a function of the asset? Now I know the asset purchase price. Now I know depends on the scale or the scope of renovation. You're not going to pull out all electrical from every building, but if you're going to do kind of a similar thing to what you did in Nashville, what are you buying the building for? What are you putting back in as a percentage of that to do the renovation?
yeah. It's an interesting question because, like, you want to buy the bricks as cheap as possible. So that, bless you, so the percentage could be greater, even though you bought it better, right?
Yeah,
If you
interesting.
if you buy units at 60,000 a door and put 50,000 into it, that's a high ratio. But if you buy it at 40,000 a door and put the same amount in, that's a much higher ratio. So it's for me, it's less about how much renovation you're putting in as what is your total cost,
Yeah,
including the acquisition and the renovation, and what that percentage is based on the units in that market,
yeah.
right? So units in
What the ratio of your total all-in cost to what new construction or other trading, other comps are in that same submarket.
exactly, because if you're at, I would like to be somewhere around 60 to 70% of the all-in costs of what other units are selling for on a as completed basis.
Got it. And that's just the equity upside that your LPs will taste when the project's completed.
Yeah, and so we're probably buying in places like like Nashville and Tulsa that are growing as well. So that accretion happens to the bottom line as time goes on, as we were talking about. As areas improve and the value of the land itself increases as well.
Yeah. I love it. I mean, to be in for 60 or 70% of what somebody else is buying a similar as completed asset for is a beautiful, beautiful place. Is that what you experienced in Nashville, do you think? Or
Yep.
is that where you are?
Yep. Yeah, we're all already getting calls. We just started leasing up a month and a half ago to potentially sell it. Same thing in Tulsa, which is we just started, as like 3 weeks ago. So there's an appetite for this workforce housing out there that,
But there's also just huge value in going through the painstaking process, working with the city of converting the zoning from, I don't remember what it was, CH to RS4, RM2 or whatever it is, to multifamily. So to
yeah.
go from commercial to multifamily, I mean, you did that hard work, and therefore you get to enjoy the fruits of that labor.
And that, and
Um,
you know, also is a fantastic city to work in. Honestly, they made, they're very welcoming, communicative, and makes the process, the rezoning process, fairly collaborative and
Beautiful,
easier than most cities that we've encountered for sure.
beautiful. On the management side, which you talked about earlier, kind of ensuring or trying to encourage the property managers to think about the property as their own. Do you do that in house, or do you have a third party management company?
Right now, we have a third party, and we use third party for all of our projects.
And is that because they're just disparate in their geography, or is that something that you have strategically decided is
We're just, we're just not set up for that right now. That's potentially something, and we can come on another podcast later and talk about
the benefits?
the pros and cons of that
Yeah.
with you. But that right now we're just focused on building out the model to multiple cities in a close proximity to Nashville and Florida. That's where my business partner is, and really kind of focusing on the repetitions that it takes, and really building a portfolio of workforce housing that either is generating profits for us and our investors for many years to come, or if the numbers make sense to sell, then we sell them off as the opportunities. Well,
It's just so hard as a property management business. We've discussed this. It's just hard to know what an owner is thinking. The ownership portion of, look, see a piece of trash, pick it up. That's easy. And although not everybody wants to do it, it's an easy thing to coach and train. The harder part is when to know what to do with a hot water tank when we see it's 20 years old, it's still working now. It could potentially break and flood a unit, hopefully a garage, hopefully somewhere that's not going to destroy a bunch of sheetrock and mold and everything else. Like, what do you do in that situation? An owner that knows how much cash is in the bank account, how positive or negative they are, budget to date vis-a-vis pro forma, knows, let's replace that thing because it's going to be a pain. And for our clients that just say, I want to go in and renovate the whole thing so I don't have to touch anything for 10 years, it's great. We love that because we understand the decision tree. But for other clients that are doing some stuff, not all, or just general multifamily owners, it's hard to know in a moment. Whereas you know the budget, you're on top of that stuff every day. You're thinking about contracting all the time. There's X number of dollars in the bank account, replace the hot water tank. And so we kind of run into, as managers, and I say it more on the single family side because we don't manage a ton of multifamily anymore, but as managers, we'd love to take ownership and just go, if it were mine, I'd replace it. But then an owner comes back to us and says, yeah, I was going to go on a vacation to Mexico with my family this month, and now you just ate through all the profit in the bank account. You're asking me to fund an account that now I can't take that vacation. Go, well, man, if I'd only known what you know in a split second,
yeah,
it'd be
yeah,
hard.
and I think I believe that's what your company is known for. Is kind of like that white glove, attention to not just what you think is best, but working with your partners, I guess, or homeowners, to make sure that they're keeping their asset in the best condition possible while meeting each individual needs of theirs.
I mean, we try. We in our annual summit recently, we did probably half an hour of exercises, and we had a bunch of our owners in the group with us, and at various tables they were there to express the owner opinion, because I own a bunch of properties that Keyrenter manages, and so do a bunch of our friends, professional colleagues, our network, and so we invited them to give their opinion at this summit, where we talked about thinking like an owner. What would you do if the HVAC is old and really needs to be replaced, but can you limp it along until the end of summer with a couple $100 that you can replace it in winter when things are cheaper and not have emergency work order calls and blah, blah, blah. But we spent a lot of time thinking about it. Our best owners are the ones that say, I want my house to be really nice for all tenants for the next 20 years. And so they're not trying to touch up paint with a paintbrush and stuff. They paint the walls when they need to be painted, but it's not everybody's in that situation. People have mortgages to pay, and market rent doesn't cover all of it, or doesn't add a surplus every month by a significant amount that allows them to escrow for future maintenance. It's just, every owner's individual and different.
What is like one or two time management or team management tools that you've added to your stack in the past, 6 months that you think like, man, like I couldn't, how do I live without this?
I do think we use Superhuman as an email tool. We do a lot via email. And so email using Superhuman and being able to do keyboard shortcuts to get through your inbox is really crucial. We added it, I don't know, 18 months ago or 2 years ago, probably, maybe even longer. But that's a great tool. We also just try to automate a ton of stuff. So, when a tenant moves into a property, we've got a form. Somebody moves a little deal in HubSpot via a Kanban perspective, and it triggers an email to the owner that says, "Congratulations, your house has been leased. The next steps are as follows." And then when the move-in happens, something else. Hey, the tenant has moved in. We've collected the deposit and rent, and they're in the house, whatever. So trying to templatize and limit some of the routine emails that a property manager would have to think through every time they send is a huge time saver. Trying to think what else. We send repeat emails all the time, and we currently have administrative staff sending out. For example, when a work order comes in and we assign it, an email goes out to an owner that says, "This work order came in. We've assigned it to this vendor." And we do the same thing to a tenant that says, "Hey, thanks for your work order. We've assigned it to a tenant. You can expect to talk to them at some point in the future," or to an owner, "Nothing to do on your side. We just wanted to alert you of this." And now we're automating it with bots that go in and do that
Is that all through HubSpot?
all through HubSpot and AppFolio, which is our property management software. So trying to automate some stuff that's just purely repetitive. But owners want to know, I mean, on two fronts. One, if they feel like it's not necessary for us to fix the sixth burner on some luxury Viking range that they had in their house, because the tenant can live with 5 burners, then they'll tell us, "Hey, don't fix this, please." And we can go back to the tenant and say, "Hey, sorry, we're not fixing it." And number two, owners can sometimes think that we're making up maintenance on their homes. And I don't know why. They had 2 people living in a home. Now there's a family of 4 or 5 living in a home, and the sewer lines don't handle the capacity well, or they didn't use the laundry room and now it's being used, and there's a crack in the metal sewer line, in the whatever it is, galvanized steel or whatever it is, and or clay, God forbid. And they don't understand why there's a work order that came in. They think we're making it up. And like, guys, here's the work order that came from the tenant. If you have a perspective on it, or you want to talk about it, we can talk about it, but it's not like we're just making this up. And then they're not shocked at the end of the month when we had to do, a service call on the AC or the hot water heater or whatever else. Just a way to alert the owner that something has gone wrong, that we're fixing it, so that they're not taking, they're not blindsided at the end of the month when there's an expense.
Mm-hmm. Yeah, that's good.
Anything else you want to cover? I think we've talked about a ton of stuff. Interesting. I mean, I have not spoken to anybody else that does motel to apartment conversion, so it's really good to have you on the pod. Anybody that you follow in the industry that's worth noting?
Yeah, I would. Anyone who is interested in investing or partnering on deals, if you either own motels yourself, or have a close friend or colleague that has motels that you think would be right for this, and you want to partner with someone who is experienced and has a track record of doing this, please reach out to me. My email is Adam, ADAM, at agbrealestate.co, not .com, .co. So Adam at agbrealestate.co. I'd love to hear, from everyone on this podcast. Any questions? Always up for jumping on a call and talking about this stuff.
Is there a minimum check size that you accept from a limited partner in one of the deals?
100,000 to is kind of where we land. But there's movement there if there's value add or potential follow-ons in other deals.
And people can also just come together as one entity, and 5 people can form an LLC and come in as one LLC entity, right?
Yeah. I mean, we were oversubscribed in the last 2 deals, so that's kind of what we, I think any developer likes to be, but that doesn't mean that'll be the case for all the other deals as well.
Okay, before we go, I want to hear one quick story about how you ended up playing on stage with the Counting Crows. I love them, by the way. I've always loved the Counting Crows, and I'm coming to see they're touring, and I'm going to see them at the
Yeah,
POK Center.
they're on tour again. Yeah, they, unfortunately, I haven't gotten the call.
The invite?
Yeah.
What?
The only one Adam, Adam Dirt, he likes to only be the only Adam on stage. Is what it boils down to, which
unfortunate.
Is really unfortunate. My long time ago, my sister was a event producer, and so her company started Voodoo Fest down in New Orleans.
In New Orleans.
Yeah.
Wow.
Yeah, her boss founded it, and I was a pipsqueak. I can't remember. I don't know if I was still in college or just after college, but she was gracious enough to give me and my friends artist passes, and I felt like Wayne's World walking around like with the artist pass, just kind of like going backstage, and they did a great job, not only at the production of the concerts, the festival, but backstage. And I had just seen OAR open up for Counting Crows in Chicago, which is where I was living at the time. So I was actually graduated. I just graduated. And so I was backstage, and I recognized one of the Counting Crows guys, and just, got into conversation with him, and, just talked for, I don't know, a couple of, 10, 15 minutes or so. And I knew that they would bring people on stage at Hanging Around. Do you know that song?
Yeah,
Hanging Around?
Of course.
And so like, I went back, I was like, my friends like, let's go backstage and see if we can get on stage. And so we got on stage, and I go up to the guy, the guitarist, was like, give me something to play. And so he handed me a maraca.
Love it.
And I just maraca'd my little booty off in front
just
of
hanging around
people. Now I'm a full-fledged, I say full-fledged.
You're a band member.
Yeah, I mean, yeah.
You call it that.
I use that, for years.
Is it on your resume?
It is not on my resume. It's only for, fun facts on podcasts like this.
Maybe it should.
I've actually never been told that story publicly ever. So
here first. Yeah. Adam, I appreciate you being on. This is really fun.
Yeah, thank you, man. Thank you very much. This is a pleasure.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week, and be sure to subscribe to get future episodes.